Today, I want to walk you through several ETFs, stock, and crypto assets I personally believe are positioned for long-term opportunity, right? So let's get to it. Not because they're popular, which they are, but because I believe they connect to innovation, right? Connect to infrastructure, connect to AI, cash flow, blockchain, and the future direction of technology. Because the stock market is what? Forward thinking. And if you're going to be successful in the stock market, you're going to learn to be forward thinking as well. That's why we was trying to talk about this week about getting out of short-term thinking, right? So anyway, now let me be clear about this. This is not financial advice. This is simply how I, Christopher, personally think about positioning for the future. And it's worked well for me, right? So, foundation first. Before individual stocks, I believe many people should first understand the power of ETFs, right? Because ETFs can provide diversification, broader exposure, right? And reduce single stock risk, right? So, first up, SPMO, right? I like SPMO because momentum often reveals where institutional money is flowing, right? Instead of trying to guess market leaders, SPMO adjusts towards stronger performing companies inside the S&P 500, right? Strength tends to attract more strength during bull markets. So SPMO is one of my heavy hitters, right? Next up, VUG. VUG gives exposure to many elite growth companies in America. Companies leading in innovation, companies leading in technology, AI, cloud computing, and digital transformation. If you was listening to those words, if that don't make you think forward thinking of what's going on in the technological world that we live in, God bless you. Sometimes broad exposure can outperform trying to pick every individual winner. QQQ. QQQ has historically been one of the strongest technological focused ETFs. As the world becomes increasingly digital, AI driven, and data center, QQQ continues sitting directly in the middle of many of those trends, right? When I think of QQQ, I've been watching QQQ over the years, and everybody has been talking about it. Everybody was recommending it. I didn't want to buy it. It was costly. It was costly in 2020. It was costly in 2021. It was costly in 2022. I'm making a point here, right? This is now 2026. Look, QQQ has not gone down. It pulls back from time to time, but it just goes up year over year over year. So right now, QQQ is like at its all-time high, 700 and something dollars. But you have to keep in mind, you can buy fractional shares, right? QQQ, I purchased some QQQ the week of Liberation Week, right? And the market was crashing, right? It had pulled back or it crashed, what have you. I purchased some QQQ at little over $500, right? Within 30 days after they suspended the administration suspended the tariffs, right? It shot up from 5 something to 6 something, and right now it's 7 something. It's not a lot of other stocks that did that. So I'm just trying to tell you, QQQ is a bad boy. That's all I'm trying to say. SCHD, right? My Charles Schwab. What can I say about it? I like SCHD because growth is wonderful. That's what I can say about it. Growth is wonderful. But eventually cash flow matters too. SCHD focuses on strong companies with healthy dividend histories, right? That health adds balance, stability, and income generation, right? The income it adds is because of your dividends, and it pays, I can't recall if it's quarterly or monthly. but it pays a nice dividend, right? And when it comes to dividend stock, good people, the key to making money off dividend stocks is to keep on fattening your position, turn your drip on. That's where when they pay the dividends, you have the dividends automatically reinvested into the position, right? And then one day when you fatten your position fat enough and getting enough dividend off it, then you have the dividend just come back to you in cash, right? So let me keep it moving. Company stock. Company shaping major trends, right? I believe Nvidia. Nvidia is my heavy hitter. Nvidia has become one of the major engines behind artificial intelligence, AI data centers, machine learning, robotics, advanced computing. Many of those systems require Nvidia chips, right? The AI revolution requires infrastructure, and Nvidia currently sits at the center of much of it. So Nvidia is the stock you want to have um, to heavily be in the AI game, to heavily be in the technological game. Yes, Nvidia is in most of those, in most of or all of the ETFs that I was just talking about. But you still want to be in the individual stock because it's going to grow significantly greater than, faster than, bigger than the ETF, right? At least it has, in my opinion. Next up, Apple. Apple is more than just phones. Apple built one of the strongest ecosystems in modern business. Hardware, software, services, subscriptions, and brand loyalty. Apple is just a beast. The ecosystem strength continues generating enormous cash flow. Nvidia is the largest company capital-wise, period. $4 trillion company, knocking $5 trillion in the door. Apple, $3 trillion company, right? So these are some great, awesome companies to be in individually. Supermicro, SMCI. Supermicro interests me because AI doesn't just need chips. AI also needs servers and infrastructure. As AI demand grows globally, companies building AI hardware systems may continue benefiting. And one of those companies is Supermicro. And Supermicro did a split not too long ago, so the price is nice. It's a nice price for you to be able to accumulate a nice strong position before that stock value doubles or triples, right? When is that going to be? Hey, I don't have a crystal ball. Some say they expect SMCI to double by the end of this year. All I know is I expect it to run, and I expect it to keep on running. So I'm accumulating, right? Netflix. Netflix transformed global entertainment, and despite competition, it continues showing subscriber strength, pricing power, advertising growth, and worldwide scale. And if you haven't seen it or heard about Netflix, where you been living at, right? Netflix is another one that did a split recently, right? So the price is really nice right about now, in my opinion. And again, you can always buy fractional shares. So now let's move into crypto, which carries higher volatility, but also major long-term technological potential, right? So digital infrastructure and blockchain. Bitcoin, so Bitcoin remains the foundation of crypto, in my opinion. Bitcoin is the number one crypto. If you're gonna be in crypto, you definitely want to be at the number one, right? It's expensive, yes, but you can buy fractional shares, and as Bitcoin runs, so will your fractional share value run as well, right? So Bitcoin has fixed supply, globally recognition, institutional adoption, ETF participation. They created the spot ETF for Bitcoin, I think a little bit over a year ago. So many investors now view Bitcoin as a form of digital scarcity. Only so much Bitcoin can be created, And after that point, it will be considered digital gold, right? So, my friend, don't miss out on the Bitcoin, right? Don't miss out on the Bitcoin. Number two, Ethereum. Ethereum interests me because it powers so much blockchain development. Ethereum is the number two crypto, good people. It's number two for a reason. Anyway, smart contracts, decentralized finance, tokenization, applications. Ethereum became a major development layer of blockchain technology. Major. So there's so much more I can say about Ethereum, but I'm just trying to share you briefly to let you know I'm talking about wise decisions, right? XRP. XRP focuses heavily on payment efficiency and international value transfers. Traditional banking transfers can sometimes take days. Blockchain systems potentially reduce both time and cost, and that is what XRP does, right? ICP, Internet Computer. ICP is more speculative, right? But what interests me is it focuses on decentralizing internet infrastructure itself. And that's a very ambitious long-term vision for me, right? ICP has been good to me, and I expect it to continue to be good to me, right? But again, do your own research and understand crypto, right? So keep it moving. Ondo interests me because Ondo tokenization may become a massive future trend. The idea that stocks, bonds, treasures, and other assets could eventually operate on a blockchain system, right? That's very important, right? So do your own research, see if it works for you, right? Now, everything I name carries risk, right? And we always have to practice risk management. Nothing moves straight up. Nobody has a crystal ball. Nobody can tell you exactly what anything is going to do, exactly where it's going to go. All we can do is bring sound, wise reasoning to you and share as to why we believe it's a sound and wise decision. So nothing moves straight up. Trees don't grow to the sky. At some point, it's going to go the other way, right? So that's why position size matters, patience matters, discipline matters, and emotional control matters greatly, right? Never invest money you can't afford to leave alone for at least a year or two, right? You don't want to invest your grocery money, right? You don't want to invest your mortgage or your rent money, right? All right. So, in closing, I'm not trying to chase every trend. I'm trying to understand where the world may be headed because the market is forward thinking. And if you're going to be successful in the market, you're going to have to become forward thinking as well. That's why we addressed early on this week, getting outside that box of short-term thinking, right? So, where innovation is happening, trying to understand where the world may be heading, trying to understand where innovation is happening, right? Trying to understand where long-term opportunity may exist. Because wealth building usually happens intentionally and not accidentally. So that is my balance, aggression, attack. That's how I personally approach building wealth over time. And that's what I'm choosing to share with you at this time. So you guys take care and be blessed continually, my friend.